Good morning, everybody. It is February the 3rd, 2017. Time to kick off another trading day. This is potentially the biggest news day of the month, and it should increase volatility for all markets. We'll start with our usual disclaimer. Hypothetical simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, it is a newsday trade. They're looking for 175 officially. Non-farm payroll. Don't be surprised if it's greater than 200K. If so, that would hurt treasuries. And on paper, it would help the equities, but you never know with those. Unemployment, 4.7. Private non-farm payroll, 180. Wages up 0.3%. Work week, 34.4. That does get looked at to confirm the numbers. PMI services 55.1. ISM services 57. And then factory orders plus 0.9. So all this news, if as forecast, especially if non-farm payroll is coming over 200K, is bad for treasuries, bad for gold, bad for the euro. And on paper, it would be good for equities and probably for crude oil, increased demand. The news focus, non-farm payroll and unemployment. Then it'll jump to ISM services and factory orders. Right now, resistance begins really at 10, but clearly we have this J period high right here at 14, so 10 to 14. If it weren't for news, would be sell 1. 19 to 23 would be sell 2. On the buy side, we have pretty good support. 124 even, 124.04, so 1 to 5 would be buy 1. And then 25 to 29 would be buy 2. Okay, scoop orders. You have the news hits. A sell 20 to 24 ticks above where the market was when the news hit, and 20 to 24 ticks below where the news hit the market. Usually work. Give you some sort of reaction. It's a safe place to get in, as safest place as you can have on a news day. Not unusual to see pretty tight trading ranges the night before the non-farm payroll number is released. It's pretty much par for the course. Right now, one of the things that is built in, I think there are expectations out there for a number greater than 200,000, no matter, doesn't matter. The official consensus forecast is 175. Okay, we're at 12. Last rotate up yesterday, 18 in Q period, 20 in M, so 16 to 20. Number 1, 23, 27, sell 1. 3 to 7, sell 2. On the support side, 150, even 150.04 is number 1, so 25, 29, buy 1. 13 to 17, buy 2. Okay, the bond can move 1.5 points off this news, but generally speaking, a limit sell or buy plus or minus 1 point from where the news is where the market is when the news hits, can generally give you a little breathing room if you have to fade the market. Okay, gold, if the numbers are forecast, should sell. Seeing a little bit of it in the overnight. Selling yesterday started. D period broke, so C or D. We have a couple of B's behind us, so we're pointed lower. Gold can move $25 off of this, so it's pretty hard. Generally speaking, you'd expect a $10 to $15 move, but every now and then it's $25. So that would take us down to 1190, 1188, and it would take us up to the 35, 37 area. But there are a couple of B's behind us. Like I said, this market will react big time. So stops 10 to 12 is where support is right now. Then I'd drop it to 1200, 1202. On the sell side, 15 to 17. And open it up 24, 26. Put us about $10 away from where we are now. 10, 12. Okay, the numbers if forecast will take the euro lower. It's reflecting that. It was sold in London. Looks like they're expecting a number over 200,000 on non-farm payrolls. You can see we got a very, very clean break in the market right there at 107.42. That's where we extended up the other day. Then we should have 107 even, 107.12. Pretty good support down there at 107. So without the news, we'd be trying to sell the 65, 75 area. Jumping up to 108. Boy, that was beautiful. How did that happen? Now here come the crazies, Henry and Charlie. Charlie is out of his ever-loving mind. Hello, Charlie. Good boy. Good boy. Getting accosted right here. 25 to 35 by 1. And that's the Newfoundland greeting. They came down and got all over me. Now they're back upstairs to see Helen. That's one nice thing about Newfs. They don't continuously nudge you like retrievers do, Goldens especially. But if you ever see a Newfie out there, they absolutely must be petted. They don't leave you alone. Be prepared. Charlie is a wild man though. God, he is all over Henry until Henry gets tired of it, and then Charlie gets put in his place for a couple, 3 minutes, and he's all over Henry once again. It's a wonder Henry hadn't really chewed him up, but he hadn't. Dogs eventually do figure it out. Don't have to worry too much about it unless you have a vicious dog, which most people don't have. Okay, crude oil, again, this 54 area, pretty good resistance, so 54 even, 54 and a quarter. If there was a market to trade where you didn't have to pay attention to the non-farm payroll, it would be crude. On the buy side, we have this low over here at 38. We're at 67, the overnight session, so 25 to 50, like it or not. That is support. That's buy 1. And 52.75, 53 even will be buy 2. OPEC's pretty well everybody's maintaining the line that, well, excess production won't be, and inventories won't be absorbed in the first half of the year, but will be in the second half of the year because the economies are growing. I hope they're right about economic growth. Trump in Japan, sometime in February, I think there's a news article out that I think I put into the room, announcing a package that will bring 700,000 jobs from Japanese manufacturers to the United States over time. That's a huge commitment by Japan, but I think all these other countries, it's twofold. One, if you cut the taxes and cut the regulatory environment, who would not want to build factories in the United States? So they're all proceeding with that assumption. The other one is that if Trump does play hardball on tariffs and the rest of it, it's a way to get around that. So that's the second reason to look at doing it. So the Trump effect, I mean, you just see large companies, multinationals, regularly announcing their plans to build plants and bring business onshore to the United States. And that's a good thing. Okay, this gap up here, remember a structural sell at 86.75, right against that low right there. It's still there. We're at 79. I believe they'll get stops above 80, so we'll play for 84, 86, sell 1. 89.91 sell 2, but the E-mini usually moves 10 points off this news, so a scoop order 10 points away is a reasonable place to fade the market. Occasionally it goes 15, but not usually. On the buy side, we're at 79, so 74, 76 based on the overnight structure would be buy 1, and then 70, 72 would be buy 2. Nonfarm payroll 175. My guess is the market's playing for a number greater than 200,000. 4.7 unemployment. Haven't seen any swags on that one. 180 private nonfarm payroll plus 0.3 wages. 34.4 average work week. ISM services 57. Factory orders plus 0.9. Baker Hughes rig count last was 1,057. My guess is it comes in higher than that. The focus, number 1, is right there. Number 2 will be ISM services. And number 3 will be factory orders. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. Back with you as soon as possible.